Ladies and gentlemen, good day and welcome to Development Engineers Limited 2Q FY26 earnings conference call hosted by
Ladies and
Equirus
gentlemen,
Securities
good
Private
morning
Limited.
and welcome to the
As a
Australian Premium
reminder,
Solar
all
India
participants' line
Limited
will be in
H1
listen-only mode,
FY26
and
conference
there
call
will be an
hosted by
opportunity for
Confide
you to ask
Partners.
questions
As a
after
reminder,
the
all
presentation
participants'
concludes.
line will
Should
be
you need
in listen
assistance during
only
the
mode
conference call,
and there will be an
please signal an
opportunity for you
operator
to
by
ask the
pressing star
questions.
then zero on
After
your
the
touchtone
presentation
phone.
concludes,
Please note
please
that this
note that this
conference is
conference
being
is being
recorded.
recorded.
I now hand the
Before we
conference over to
begin,
Mr.
I would
Vaibhav
like to
Shah.
point out
Thank
that
you,
this
and over to
conference
you,
call
sir.
may
Yeah.
contain
Hi,
forward-looking
good afternoon,
statements
everyone.
about the
Thank you very
company,
much for
which
joining
are
into the
based
second
on
quarter
the belief,
FY26
opinion,
earnings
and
call of
expectation of the
DW
company
Development Engineers Limited.
as of the
From
date
the
of this call.
management side, we have
This
with us Mr.
statement do not
Krishan V.
guarantee the
Bansal,
future performance
Chairman
of
and
the
Managing
company,
Director,
and
Mr. Samir
it
Agarwal,
may
Chief
involve risks
Financial
and
Officer, Mr.
uncertainties
Pankaj Agarwal, Chief
that are
Operating
difficult to predict.
Officer, and
I would
Mr. Sanjeev Sancheti,
I would
who is
now
the
like to
advisor
hand over
IR
the
to the
floor to Mr.
company.
Parth from
Without
Confide
taking
Partners.
much time, I will
Thank you,
now
and
hand
over
over
to you,
call to the
Parth.
Mr. Sanjeev Sancheti and thereafter to the Krishan sir
Thanks,
for his
Krisha.
opening remarks.
Good
Thank
morning,
you, and
ladies and
over to you, sir.
gentlemen. This is Parth from
Thank you,
Confidely
Vaibhav,
Partners.
and good
We
afternoon to
represent the
everyone.
investor relations for
A very warm
Australian
welcome to
Premium
the
Solar
Development
India
Engineer
Limited.
Limited
On
Q2
behalf
and
of Confidely
H1
Partners, I
26
warmly
earnings
welcome you
call.
all to
Before we
H1
begin, I
FY26
would like to
earnings
draw your
call
attention to
of
the safe
Australian
harbor statement
Premium Solar India
contained in
Limited.
our
The
earnings
company will be
update
represented by
presentation
Mr. Nikunj
available on the
Patel, who's the
website
chairman
of
and
both
executive
BSE and
director,
NSE,
and
as
Mr.
well as on
Kalpesh
the
Vakharia,
company's
who's the
website.
chief
With this,
financial officer of
I
the
now
company.
invite the
Now, I
Chairman and
would
Managing
like to
Director,
hand over the
Mr.
call to Mr.
Kishan Lalit
Nikunj
Bansal,
ji.
to share his opening
Thanks,
remarks.
and over to
Over to you,
you,
Mr. Bansal.
Nikunj sir.
Thank you so much, Sancheti.
Thank
And
you.
good afternoon, everyone. A very warm welcome to all the participants
Good morning,
joining us
everyone.
on the Q2 and
We are
H1
very pleased to report the
FY26
strong
earnings call
performance
of
of
the
the
Development Engineers
financial
Limited.
year
We truly
result for
appreciate your
first
continued
half of this
engagement
year.
and support.
It reflects the
I'm
strength
pleased to
of
share
our
that the
business
company
model
delivered
and
robust
also the growing
performance
demand
during
for the
Q2 and
renewable
H1
energy within
FY26,
our country.
marked by strong
Despite we
revenue
had
growth,
some
improved
GST
operational
regulation challenges
execution,
for 3 weeks
and
and
strategic
also the
capacity
better
expansion.
monsoon,
Revenue from
which
operations
makes
for Q2
challenges in
FY26
execution of
stood
the
at
project. We
2,700
have
million,
come up with the strong
representing a
figures for
39.2%
this
year-on-year
this
growth,
quarter. The
while
key
operating EBITDA
milestone
grew
up to
47.9%
now is we
year-on-year
have successfully
to
commissioned
441
400
million,
megawatt
with
TOPCon line
margins expanding
within
to
a time limit
16.3%.
on this
On the order
Lavpacham
front, the company continues to
before
maintain a
2
healthy
weeks
order
ago.
book of
That will make the
1,308
total
crores as of
capacity
September 30th,
400 megawatt
2025,
TOPCon and 400
supported by
megawatt
robust
monopark.
traction
So
across
total it will be
power,
800
oil and
megawatt
gas, and
facility.
process
The
industry.
further 400 megawatt
During the quarter,
facility
we
will be
also
coming.
secured
We are
170 crore
expecting
of new orders from
to
leading
start before
thermal
the
power players,
within the first
reaffirming our leadership in the
quarter of
sector.
the next
The company
financial year
successfully commissioned
between
the balance 15,000 metric tons
April to June.
of process pipe
The overall
solutions capacity at our
first
Anjar
quarter
facility
of the
in
next
September
financial
2025.
year, our total
This brings
capacity
the
will
total
be
installed
800
capacity
plus
at Anjar
400,
to
1.2
30,000
gigawatt.
metric ton per annum,
If we see
effectively
the
doubling our
growth as
production
per the
capabilities in a
segments we are
short period.
working on, the
This
solar pump
expansion
segment
has
is
enhanced our
showing the
ability to
continuous
cater to both
momentum, and we
domestic
are
and
expecting
international
35
clients
to
with
40%
greater
revenue from this
efficiency.
segment for
Additionally,
this
our
financial
7,000
year
metric ton seamless
with
pipe
the
plant is
expected
progressing
margin.
as planned and is
Currently,
expected
we have
to
got
commence
approval
commercial
from
production
the
by January
10 different
2026.
states from the local
This will
government
strengthen
agency.
our backward
Our
integration,
EPC
enhance cost
division
efficiency, and expand
also
our
growing their
product
C&I
mix.
segment,
With
not only
world-class
in Gujarat but
infrastructure,
also in
a
Maharashtra and
diversified
Rajasthan, and
sectoral
we are
presence, and a
expecting
healthy order book,
15 to
a
20%
healthy
growth
order
from our
pipeline, DEE
EPC
remains
division.
firmly
Our
positioned
wholesale
to
distribution
drive sustainable growth and
also
profitability. With this, I would
expanding
now like
from
to request
Gujarat,
our
Rajasthan,
CFO,
and Maharashtra
Mr. Samir Agarwal,
to Madhya
to
Pradesh,
take you through the
Chhattisgarh,
detailed
Haryana, and
financial
South India.
performance
We
and
are
balance sheet
expecting
highlights.
50% revenue
Over to you,
from this
Samir.
division for this financial year. As
Thank you,
said
Bansal
earlier,
sir, and
overall
good
we are
afternoon,
expecting
everyone.
75%
I will
plus
now take
CAGR
you
for
through
this
the
year
financial
and
analysis
coming
and key
year.
operating
We are
metrics for the
advancing
quarter and
our
half year ended
backward
September 30,
integration
2025.
initiative to further maintain
During
our
Q2
profitability
FY26,
and
revenue
increase the
from
revenue
operations stood
long
at
term by adding 4 gigawatt solar
2,700
cell
million,
manufacturing
growing by
facility. First phase
39.2%
will be 1
year-on-year.
gigawatt
Operating EBITDA increases
machinery,
by
which requires 900 to
47.9%
950 50 crore crores capex. Once again, thank you very much for everyone's time. And now I hand over the floor to my colleague Kalpesh Vakaria as a CFO for Australian Premium Solar. Thank you, Kalpesh.
Efficiency gains and better fixed
Thank you so much,
cost
ladies and gentlemen, for attending our investor con call. I, Kalpesh Vakharia, would like to take you through the financial highlights for the first half of FY26. Our total income stood at brilliant 302.93 CR compared to 164.24 CR in half one FY25, which is a strong growth of 84.5% year-on-year. EBITDA increased by 121.9% to 43.28 CR, with EBITDA margin also improving to 14.29% from 11.88% last year, primarily driven by higher operating leverage and improved product mix. PAT grew 118.7% to 28.60 crore, with PAT margin expanding by 148 basis points to 9.44%. Our earning per share also increased for half one FY26 to 14.19, up from 6.63 in the same period last year. On the balance sheet front, the company continues to maintain a healthy financial position with a net debt to equity ratio of just 0.05 as of September 2025, reflecting our prudent capital management and strong cash generation. The commissioning of our new 400 megawatt TOPCon line during the October month marks a key capacity milestone and is expected to further strengthen our top line and margin performance in the coming quarters. We fully remain committed to maintaining strong financial discipline while supporting our next phase of growth, including the upcoming solar cell manufacturing project. Thank you so much for listening to me, and you can now just bring out your questions, whatever you have to us. Thank you so much.
The cash conversion cycle stood at 243 days compared to 247 days.
Participants who would like to ask the questions may raise their hands.
Days of 104 and inventory days of 223. As previously communicated during investor interactions, the relatively high conversion cycle.
Mr. Raman, please unmute yourself and introduce yourself.
As you are aware, we had
hello sir, can you hear me?
Resolution in September
Yes.
2025.
So, hi sir, I'm Raman from Sequent Investment. I have a few questions with respect to the company. What's our current order book?
Raman, as we said earlier as well, we are working in a three segment. One is our pump segment, where we have a fixed order for the next 2 to 4 months. In distribution, we have a 66 distributor, but we take every month order because there's always a fluctuation of 15 to 20 paisa per watt in the pricing. And for our retail, we get every day order. So for solar pump,
strong momentum in
our order book is as well as in 310 crores at the moment.
Keeping us well on track to deliver.
Okay, which will be executed over the next 4 months, if my understanding is right.
4 to 6 months.
Okay.
And then other division is we just do as it comes.
Okay. Sir, I just want to understand the capacity. You said you have the old capacity of 400 monoperk and now 400 TOPCon. But I think when we, by the end of Q1, we already had 600 megawatt capacity, right?
Yes.
And upon that, you added 400 more in October, which takes the capacity to 1 gigawatt.
Yes. In month of March, when we had a 600, we had a 400 monopark and 200 megawatt poly capacity.
Okay.
So the poly capacity now we just sold those machinery. So now we have 400 megawatt monopark and 400 megawatt TOPCon facility, because for
anyone who wishes to ask
poly panels
questions,
there is not
press star
in a
and
demand
one on the
overall.
touchtone telephone. If you wish to remove yourself from the question queue,
Yes,
you may
Raman.
press star and two.
And how much did you
Participants are requested to use
sold this
handsets
200
while asking a
megawatt of poly
question.
capacity?
Ladies and
No,
gentlemen,
it's just
we will wait for a moment while
disassemble
the
and
question queue assembles.
dismantle and sold, because always 30-40%
The
of the
first
machinery we
question,
can utilize in existing facility, but like
a reminder
only
to all participants
the
that you may press
tabor
star and one
machine,
to ask a
which
question.
we cannot use. So usually we have to dismantle and sell it to the the weight metal price.
So you got revenue in front of that, right? If my understanding is right. So I'm just asking how much did you dismantled it and sold the unusable?
So that will be, as I said, it's at metal price, means at scrap price, but I can check and let you know. It won't be much.
Okay.
Maybe less than 50 lakhs.
Okay, understood, sir. And so I just want to understand, we operate in 3 divisions: pump segment, distribution, and retail. In
The
pump
first
segment, we
question
just
is
do
from the
EPC,
line
right?
of Vaibhav
We
Shah
don't
Yes.
from
manufacture
Equus. Please go
pumps
ahead.
and all that stuff.
No.
Hi, sir. Thank you very
Because
much
in
for the
pump,
opportunity.
Mhm.
Sir, my question is
pump
related
segment,
to power
50%
sector. While
cost is
seeing
from solar
one of the
panel,
order
Mhm.
from the power
10%
sector
cost is
side,
from
how are you
the pump,
seeing the
and
upcoming
the
order
10%
pipeline
cost
from that
from
sector?
the
So,
You are not audible, sir. You are not audible, please.
mounting systems like metal,
am I audible now?
and the
Yeah.
10% is soft cost
So I was
like
mentioning, as you have already
installation,
won one of the order from the
transportation,
power sector side,
10 to
how are you seeing
15%,
the potential pipeline
10
for
to
FY26
15%,
and FY27 for
including
the
sales
power sector?
commission and everything, and remaining is the margin.
Pankaj will
So
respond to this question,
overall,
please.
the pump manufacturing can give only contribute up to 10%.
Yeah, I understood that, but I just want
But
to
we are not
understand.
doing. We are not doing that.
Yeah, I just want to understand. Out of this segment, you do mounting and installation, right?
No, we do the panel supply as well.
Panel supply, mounting, and installation.
Yes, and that project comes
Can you please
as a tender to us.
go close?
So the pump only
So
we
you're not
purchase
audible.
from the
Your voice is
partners.
very low.
So this has a gross margin. This segment has a gross margin of around, let's say, 60 to 70%.
How come?
Because you're supplying solar panels as well as you're doing mounting and installation as well as you're doing the
Am I
project
audible now?
execution part.
Yes, sir, you are
Yeah,
loud and
so
clear.
if we,
Okay. So
it's
what
not
I was
60 to
telling is we have a
70%.
good
The
pipeline
gross,
available with us
the
from power
margin
sector.
we are expecting the from
advanced
pump
discussion with
division
many
is 12 to
customers.
15%.
And good order
Acha.
book will be there from power
So
sector
12
in
to
FY
15% is
26,
margin, because the
27,
panel
and same will be
have
continued for years
a
to come.
cost, the mounting have a
Mhm.
cost, the installation have a cost, the transportation have a cost.
Thank you.
So there is, and this is a service business. In service
The
business,
next
the
question,
margin is always
the
15%.
next question is from the line of
Understood.
Pranay Pera
Product with service.
from Kotak. Please go ahead.
And so my last question is with respect to your
Hi, sir.
retail
Thank you
division.
for
In
the
retail, we are
opportunity
selling
and
solar water
appreciate
pumps
the
and I think
monthly
solar
updates
grid
that we are
inverters,
getting for the revenue
if I'm
numbers.
right.
My
In retail,
question
we
is
sell the
regarding the
solar
order
panel and the
inflows
grid
within the two
inverter, not
segments.
the
So for
solar
the power
and
segment,
solar
we have
water
seen
pump
this 200
for
crore
the
order coming for us.
Kusum
Now for
projects.
the next
Okay.
half,
That's
so the next 6
when we
months,
say pump
how
division,
much should
the
we
solar pump we
expect in the
consider
power
as
segment?
a
And
pump
also
division.
for oil and gas,
In
what are we
retail division,
anticipating in the
grid
next 6
inverter and
months?
solar
Because in the
panel
first 6
and
months, we have not
kit.
seen very large
Like
orders from
in
oil
kit,
and gas.
there is
So overall, for the next
mounting
6 months, what
systems
is
and
your
also
estimate
some
of the order inflows that
electrical
we are
kit as
looking
well.
at? And what would be the
So
closing order
yeah,
book
my
position
question is with respect to
at the end of
this
FY26?
solar grid inverter.
Sir,
Are we
first of all, I
manufacturing it
will answer and
in-house
then
or are
figures
we
Pankaj will give you.
outsourcing the
I just
manufacturing of
wanted to
the solar
reaffirm
grid
and
inverter?
We out
reconfirm to all of you that,
for now we outsource.
as we have been telling
And
time
yeah,
and
is
again
there any
that,
plan
the
for
initial phase of
starting a
design and
manufacturing?
ordering of
It
long
is
lead items takes
in
sometimes more
a
than the
planning.
expected time. And, our
Okay.
number will
Thank you, sir.
come. Our number means
Yes,
the
thank you.
order when the order for critical piping
Thank you,
can be
Raman.
decided comes little later.
Before we
But now,
proceed further,
that
Nikunj ji, there's
stage has
one question
come
in the
wherein
chat.
people have
It's
rigorously
from Kunal
started
Patel. So his
floating the
question is,
inquiries,
what can
getting
be
the
combined revenue
our
of
offers, and
1 gigawatt
even
solar
including discussions with
module and
with
1
many
gigawatt solar cell
prospective customers
after
on
December
feasibility face-to-face
2026
basis,
when we commenced
at
that
the top
cell
management level.
manufacturing in
So
Q4
just it was just
FY27.
a saying that why
The
there was
cell
some delay or something like
manufacturing
that
takes
in
18 to 20 months
getting the
just to
traction
start.
out of this particular
So
sector.
it
So now
will
I will
up and
request
running
Pankaj
on
to give the figures that
27
what is the
after June
expectation in this
27.
financial year, what
But
is
1
the
gigawatt
expectation in the
solar
coming
panel,
financial years from
we
the
can expect
power as well as oil and gas business.
1200
Pankaj,
to
please.
1200
So on a
crores
broader
turnover from
perspective,
the
we are
solar
expecting
panel
around
manufacturing
500
and
CR
remaining from the
from power sector
projects.
in this coming 5 months
So say
time
like when we
till
do
March.
the EPC, that
And then
segment
subsequently, we
always
are
give
expecting
3
around
times more than
650 to
the,
700 crore
or
order,
at least
again
double
in FY 26-27 from
turnover
power
than the
sector.
solar panel. When do
And
we do
as
pump?
far as oil
It's
and gas is concerned,
2.5
we are
times.
expecting around 100
So overall,
CR
once we
in next
as a
5 months
APS
time.
have a 1
And then
gigawatt
next
facility
financial
and
year,
up
we are
and
having a
running
very good hope from various
at full 12
sectors,
months,
various oil and
we
gas
can
companies
expect
from
about
India and abroad, maybe around to the
1500
tune
to
of around 700
1800
crores.
crores turnover.
Okay, so we would go probably from just 100 crores for the next 6 months to 700 crores for the next FY. So next 5 months, not very large orders in oil and
Please
gas.
introduce yourself.
No, not very large order from oil and gas, but from power definitely yes.
Yes, you are.
Okay, but next year we are confident of substantially large orders in oil and gas.
Yes, absolutely, absolutely.
And
Thank you very much.
consistent
Thank
growth
you.
you are showing.
Yeah.
So I think you are the one of the best management I have seen in this
Thank you.
stock
The
market.
next question is from the line
Because
of Anmol
every
Mittal
time you are doing
from
surprises
SMMC
without raising the
Private
debit,
Wealth.
that
Please
is
go
a
ahead.
key point that I am liking very much
First of all,
regarding your
congratulations,
management
sir, for
qualities.
great set of
So
numbers.
even after
Secondly,
doing
if you
so
can
much of
guide me
capex,
related
still our
to
debit
change
levels
in
are
power tariff
very
and what
low,
will be
almost
the
nil, I think.
future outlook regarding that?
Yes,
What
that's
will
what
be
I would
the
like to hear.
second half EBITDA
On this
margin
front,
outlook? And
I wish to
if you also
congratulate
guide,
you,
if you
sir,
can also guide
and your
Thank
team.
you
about
very
the
much.
future years
Yes.
EBITDA margin
Sir,
possible.
I wish to ask you a couple of questions. First
Sameer,
question is
please.
regarding our capex and everything.
Yes.
So
So
you are having a
Amolji,
very
as far as
excellent
our
vision.
true
So very
potential of
good,
the business in
very
terms of
short
earning
period of
EBITDA
time, you
margin,
will
that is
become
lies
the one of the
somewhere between
manufacturers
18
in
to
top on solar
20%.
cells.
Since
Okay,
there
sir.
is
But
some
as an
downward trend
investor,
in
our company,
power tariff,
in our company, what
therefore there
I
is
am
a
feeling
slight
that
dip
let
in
us
terms of
we are
EBITDA
little
margins.
bit lag
So this
in
year
going
we
for
shall
capex.
be keeping
That
a
I am
range of
feeling why because when
16 to
compared with our
18%
other
EBITDA
peers,
margin
they already
from the
started the
overall
solar cell
revenue of the
manufacturing plants, and they
organization.
are likely to commission in
Supposingly
the
we get
in
a
this financial year
decent amount
or the
of
next
revision
financial
in
year, in
tariff,
the mid of the next
then
financial year, most
probably
of the
we shall
companies.
be lying
So I
back
think
to the
somewhere we
normal
are
EBITDA margin, which
little bit
shall be
late
18
on
to
this
20%.
front. That is
So
my
since
first
the
question.
matter is
Second question, sir.
competitive and we do not have
Yes.
any clarity in
So
terms of the exact
you are
tariff which we
correct.
are going to get in
We
future,
initially had options to
the
operate the solar cell facility in
accuracy
other state than Gujarat,
cannot come
but
in terms
we as
of
a
the overall
management
margin.
decided to
But
stay in
the
Gujarat
best I can assure,
and
16 to
especially near our
18%
facility.
EBITDA margin
And
will
we
definitely
have
be.
find out some land almost 3 to 4
Okay,
months
sir.
ago,
And on the
and our
revenue
water
front, you had guided
application
15%
approvals is in a
revenue growth for
process.
the full year, and
So
in second
until
quarter we got
because
around
in solar
40%
cell
growth, which is
manufacturing, the
slightly
key things
7%
is the
less than
water
the order executed
approvals
guidance, which
from
is
the
shared
government.
on
And as soon
month-on-month
as we
basis
get
from the
that,
last 3 months. So can you
everything
guide
else
me
is
about the full year revenue
line up
guidance
and tied up,
potential?
including the
So
banking, including the key management staff,
our
including the
pending
technical
order book is
partners overseas.
concerned, that is
But
enough
until
amount
the
of
government
orders
approval
we
doesn't
are
come,
having in hand, and we
we
are
have to wait.
absolutely on
Yes.
track in terms
And
of
we don't want
guidance
to
given
start
in past
in other states because most of our staff
to fall in place.
are in Gujarat.
But
And
due
we
to
are,
some
of course, we have a good
reduction
management
in
team
power
and we
tariff,
can do
there may
so
be
much
some
within
reduction in terms of overall
little
top line and bottom
capacity
line.
or little capital.
And
But
that we have
we don't
already
want to,
guided in our
for now,
Q1 earning call as well.
we think it's a better
Sir, one
we
more thing I
work in
will just
Gujarat.
like to point out that
From Gujarat.
historically, our
Okay,
Q1
sir.
is
Sir,
leaner than
my second,
Q2,
my
then
another question
Q3,
is
then
that,
Q4.
sir,
So we are
so
practically
many solar
following the
companies
same trajectory.
are
And
planning for
moreover,
go for
since we are
renewable
in
energy, like
project business,
they're going for
somewhere some stops
hydrogen business and everything.
definitely occurs, and the
So,
numbers can
like
exactly
that,
not
of
go
course,
as
it
per
is a
the
very
given
initial
plan,
stage, I
but
think. Even
we
though,
are are again
whether we are
assuring
planning for it
that by the end of the year,
in the
we
near
are
future, anything like
definitely
that
bound
for
to achieve
green
the
hydrogen.
guidance which has been provided.
So you are correct. The hydrogen
Okay,
is
thank you.
still not worldwide. Still, it's not mature technology, but definitely the battery energy storage. We have our eyes on it. The battery energy storage is getting matured.
Hello,
If
very
we
good
talk
afternoon. Am
about
I audible?
in Australia,
Yes, please.
say like from last 2
So my
quarters,
question is regarding our business
like
with
I am working
engineers
in
India, the
Australian
direct
solar
and indirect
industry since
procurement
last
and the
15
market
years,
size,
and
market share there.
the
Can you
solar
just provide some
battery
color
means battery
here?
systems already started getting
Can you
mature
repeat
in
your question,
Australia.
sir? Sorry,
So
I
I'm
couldn't get
expecting
your
within
first
2
line.
years,
My
not maybe
question is
within 2
regarding
years,
our
earlier,
business with
I'm
engineers
expecting
India
some good movement will
and
start
the direct
happening
and
or
yeah.
already happen in
So,
India
sir,
as well.
first of all, let me clarify
So
that
whether we are
Engineers India
going to have
Limited is the
some interest
PMC
on
in
that
most
front
of the
also, sir.
contracts. They do
Yes,
not
yes.
award the jobs
We are looking
directly
at.
under EL's
Oh,
name.
that's great. That's
So,
great. And finally,
whatever
sir,
inquiries we are
as we
submitting,
are seeing
like last
the
time we
results,
got a very big order from GAIL and it
year-on-year
was
numbers are
in
very,
that
very
PMC
excellent.
was Engineers
But
India Limited.
from
But
last
now,
2 quarters,
we are having a lot
quarter-on-quarter
of
numbers
discussions
slightly
with
modest.
many other power oil and gas
No
companies
hope. I
where
think
EL is the consultant. And
recent
even today morning
capex
also we had a
commissioning
meeting
of
in Bombay and just returning
model
from that
manufacturing of
meeting only.
400 megawatt.
And we see huge potential in
That
those.
might increase
So,
the QOQ
again,
numbers
as
also in the
Pankaj
upcoming.
told,
Can I
in
expect that, sir?
coming after 6 months time in,
Yes, you
let us
can.
say,
And
Q1 and
if
Q2
we are
of
already
next financial year,
utilizing
we
our
are expecting
facility at
huge
maximum
traction
level
from
in last
domestic
Yes.
sector
quarter,
as far as the
previous
oil and
quarter.
gas sector is
So last
concerned.
quarter we haven't had a room to increase
Okay,
our
sir. And the direct
production
and indirect
capacity.
procurement
And
and the market share
also
there.
little bit GST change
Yeah,
government announced
I
on
still
4th.
again couldn't
So
get what is
between
the meaning
4th
of
to
indirect and direct
22nd,
market share.
everybody was hesitate to take the
The
panels because the
procurement.
GST reduced from
Sumit, can you answer because
almost
I'm not able to understand.
reduce up to 5%. And the other thing was because of the monsoon, some
Yes,
projects order was already there, but they couldn't pick up the stock
as we
because
all
of
know, there are certain
they couldn't
geopolitical
execute some
situations
projects.
which have
But still
arisen.
overall
There is
with
some
help of
difficulty in
different
procuring the
segment
material
and
from
we have a
outside India,
diversification
particularly China.
in different segments,
But
we achieve the
as
same
far
number as the last
as
quarter.
the future is
And
concerned,
we
Then what?
definitely
we are
in solar
totally hopeful
industry for
and confident
specifically
that
retail
whatever
and
material
pump,
which is
we
not
always
available
say
in India,
from October,
uh,
November,
we
December,
would be
January, February,
allowed
and
to
March is like solar
get it
month
imported
in
from
India.
outside India.
The
So
good
the government
weather,
is very,
good
very clear,
demand.
and they are not
By
going to
April,
stop us
many
in
people
terms
have
of
the
overall
they
production
want
and
to finish their projects.
overall
Either it's a government
infrastructure
project
development of
or
the
either
country.
it's a C&I projects. So always in last we are
Okay,
working
sir.
in
And
India
can
since
you just
2013. So that's
give me a
what my 10 years experience say. Always last
color
6
around the
months,
market
always
share?
perform better than the first 6 months. And the good thing is we now got the capacity expansion at right time as well. So definitely, as you are expecting,
Our
I am
market share
expecting
remains as it is.
good numbers
There is
as well.
no change in that. But but it's very
Excellent, sir.
difficult for me
Excellent.
to right now say how much
Thanks.
percentage
Thanks for the
is with us
opportunity.
and how much
Thank you,
percentage
sir.
is
You
with the
welcome.
other people. But
Thank you, sir.
our position remains steady. There's no downgrade,
Just a
or I
quick
will say
reminder
that
to
there's no
everyone,
upgrade
if
also
you
right
have
now.
any questions,
So it's
please
status
raise your
quo is
hand
there,
using the
and
reaction tab.
whatever we can do with our existing capacities, we are fully booked, and we shall continue to remain fully booked. At least,
Mr.
we
Archit
have the
Agarwal,
clear visibility
please
for next
introduce
3 years, so
yourself
there
and
shouldn't be
speak.
any issue in that.
Okay, sir. Thank you.
Hello.
Yes,
Yes,
Archit.
my name is Archit Agrawal and I am from Steptrade Capital. My question is with regards to the margin profile. As you have mentioned the margin profile for pump, which is 12 to 15%. So what is the margin for other segments?
So my question is,
For
how the
wholesale, we are
demand or
expecting
inquiry
10 to
pipeline is
11%. For
there for our
retail, we are
heavy
expecting 15
fabrication
to
business?
18%.
I understand that mainly caters to wind sector demand for tower fabrication,
Okay.
but I just wanted to
And
know
what
what
is
kind
your
of
current
business we
capacity?
can expect over
Like
the next
you
2
have
3 years,
added
or
400
maybe you can
megawatt
give some
top
sizable.
online. So it is already commenced or?
Sir, as we just
Yeah, it's
mentioned
already
in
commenced.
our earlier
So
question,
this month we are
answer to our
expecting
earlier
30%
question.
output. Next
So,
month we are
the
expecting
pipeline is
60 to
extremely strong and heavy as
50
a
to
matter of fact,
60%,
and we
and
are
month
expecting
after we
that
are
in this
expecting
next
full capacity
6
because we
months or
need some
4
ramp
months or
up
5
time.
months of this financial
Okay.
year, we shall
And
be able to
this
book around
next
500
phase of 400
crore
megawatt,
of
it will be commenced from
600 crores
Q1
of power
FY27,
sector
right?
business,
Yes,
and in the
yes.
next financial year also
Okay. And
almost
1
of the
gigawatt
same amount.
solar
But
cell,
in this
when
remaining
it will be
financial
commenced?
year for oil and gas, we may be booking
From
just
the
around
date of approval,
100
it will
crores.
take
But
18 months.
next year, in the first
Okay.
half, we shall be booking
And the
more
Yeah,
than
we are
around 600
expecting
crores
in
worth of
by
business.
June
And
27.
the same is expected to
okay. And the
continue for the
capex of
second half
100
also,
to 950
because
crore
by
you
that
have
time there will
mentioned.
be more
So,
maturity from the
you
power
will
sector jobs
take the
also,
date
more
or
inquiries will
how
come.
it will be?
I will just like to give you the numbers
So
which are,
we are
I will say,
expecting to
mind-boggling.
invest
BHEL has around 53
30%
units
in a
of
business,
almost
and
800 or 660
70% will
megawatts.
come
And
by
L&T
them.
has an order of almost 23
Okay.
units of
Okay. That's all
these
from my side.
bigger
Thank
units.
you.
So, none of these people have that much capacity. We are preparing a paper
Mr.
and we may
Neeraj Rishi,
circulate it
please
shortly
introduce yourself.
on the
Joseph,
opportunities
sorry.
available on this particular sector in details, so that, you can be rest assured that, whatever we are talking makes sense.
Got it, sir. Also, sir, on the
Maybe
margin side, while we have
Mr.
posted very
Joseph
high
is
margin for the
on
cell
mute.
fabrication
Maybe.
segment for the current quarter.
Yes.
So what's the reason behind
Yes,
the quarterly
sir. Thanks to
volatility,
some good set of
and
numbers.
what kind of would be the sustainable margins?
Sir, actually,
Neeraj, I
in that heavy
couldn't
fabrication
hear
unit,
you properly.
sometimes we are,
Can you hear me now, sir?
Yes.
but I will say that, the
Yes,
product
sir.
mix is
So I don't have a question, so only a
getting some
suggestion.
shift in that. Earlier, most of the times we were doing
Yes,
purely
please.
fabrication job. Now,
Yeah,
we
and
are
is
doing
that
fabrication with some
actually
supplies involved into that, which is
very
giving
good
us
that we are
some
venturing
reasonably
into
good
solar
numbers.
cells and the battery
And
energy
in the
storage.
coming quarters
But
also, there may be
as
still more
somebody
shift
has
that we may be
pointed out earlier,
asked to supply raw material
our
also. So,
competitors
it
have
may
already
add to
started
the top line as well as a
the
little bit
capex
on the
on this.
bottom line
So I
also.
think
So,
we should
there is a lot of,
maybe
shift
work
going
on
on
this
as far as the
as fast as
methodology of the
possible.
order execution is
Only a
concerned,
suggestion.
particularly in that heavy fabrication unit.
Yes,
So that is
yes,
why
you are
you are
correct,
seeing
and
a little
we
bit
are
bumps
also
in
our
that
top management
particular
also
segment.
working closely with government. And the good thing is we
Okay.
already
And
have
sir,
our
just last
contracts
question, if may I
done
ask,
for
was there any
long-term
change in
contract done
product
for
mix
the
in terms
local
of
solar cell
metallurgy, or was there any
availability with Jupiter,
import
and
of
also for
raw material?
TOPCon
Because if
solar
I
cell,
see gross
we already
margins
getting
has
regular
declined
supply from the
substantially.
local market
Can you
because
please
of our
give color
experience in
on
the
that?
industry
In
and our
heavy
relationship with
fabrication, there is no change in
different
metallurgy. It
companies.
remains the same.
But in
The only thing
meantime,
changes
we
is
are
the
also eagerly
scope
wants to
mix.
start
Whether
solar
we are
cell
just
for
doing
now
fabrication,
as soon as possible.
that means we are just doing 100%
Okay,
job
sir,
work
that's all from my side. That is it.
basis, or if we are adding
Thank you.
some value added with some other material and on which we get the
Mr.
margins.
Achut
So that
Prabhat,
is the
you
only
can
reason. Otherwise,
speak next.
there is no metallurgy. Metallurgy doesn't play any role because it's all carbon steel and all standard same items, except that the sizes will change, the diameters will change, the thicknesses will change. That's the only change which happens.
Maybe
What is sir?
Mr. Prabhat is
My
on
idea
mute.
was
Hello, am I
more
audible
from
now?
the
Yes.
company level, which is now gross margin is now 60%, which used to be 65%.
Hello?
Since last couple of quarters.
Yes, Achut.
So on that level also.
So on company level, definitely we are going to have a drastic
Yes.
shift, from next year onwards, when we shall be doing major portion as high alloy
Yes,
Sir,
sir.
you
steel
are audible.
material
You can speak.
and much less
Yeah.
carbon steel
So
material. It will practically,
actually, if we
the
see in
percentage
even
will
in feedback, like lot
altogether
of people are
reverse.
saying like
That we shall be
we are
doing
going to get
very high value
overcapacity in
item added items
FY27.
in the coming year,
Can you provide your
and
view on
the
that? Like, is it true or?
low added value added items will reduce
See,
drastically from
if
coming
we
year onwards.
see, I already said many
This year,
times in the
we
past,
had
if we
switched
see the
mostly from
China
carbon steel to stainless
overall
steel.
energy
And in the
demand
next
before
year,
20
we are
years,
going to
it was
shift
400
majorly from
gigawatt
carbon steel,
active power
stainless steel
station
to
requirement.
alloy steel,
And currently,
stainless steel,
India is
and
also
then
on
I will say
400
that it will be
gigawatt
alloy
active
steel,
power
then carbon steel,
requirement.
and then stainless steel. I
So
mean, that will be the
before 20
ratio
years,
of the
China was there,
percentages
and
which will
currently
happen in the
China is
coming years.
sitting on 2,800
Okay,
gigawatt
sir. That's
active
it. Thank
power
you so much, sir.
requirement for the energy. That means within a 20 years, our overall
Thank
energy
you.
consumption
A reminder to all
for
the
India will
participants
go
that you
up.
may press
Even
star
if
and
we
one to
don't
ask
touch
a
at China,
question.
still we need 5 times more
The
energy
next
than
question
where
is
we
from
are
the
at the
line of
moment.
Yash
So every
from
year
Marina
and
AMC. Please go
year
ahead.
in, year out, our
Hi, sir.
energy
Congratulations on commissioning of
requirement will
the
grow up.
entire Anjar
The
unit,
current
and thank you for the opportunity.
setup, the government
So my
of
question
India
is,
is looking for 500
firstly,
gigawatt for
around
renewable
the
energy.
pilot
Out of
plant
that,
of
300
for
gigawatt from solar.
hydrogen that
That
we
means
were
40
supposed
to 50
to
gigawatt
commission
solar
at the Anjar facility,
renewable
and
energy
any
we are expecting
inquiries
every year
relating to
from now on.
the
From recent
hydrogen
report
EPC
for the
that we were
solar
talking about
panel,
on the last call?
including the recent
Samir, can you respond?
capacity
Sir,
expansion, that is
yeah. Yes,
120 to
so
130
just
gigawatt
wanted to let you
solar
know
panel
that
available,
we have
manufacturers available in
made an
industry,
understanding
including
with an
some monopark
international player
facility, and some
to
maybe
for
have
the
a poly
supply
as
of
well.
the entire
Very little, but
hydrogen
some.
unit.
So the overall energy requirement and
In
also this
one
is a
hydrogen
nameplate
unit, there are
capacity. So
three
the actual
aspects. One is the
production from the
electrolysis, second is
so
the
whatever the
separator, and the
nameplate
third is the
capacity, the actual
hydrogen
production is
purification
usually
system.
70 to
So we have a
75%. So
proprietary
of
through
course India
our
have 20 to
subsidiary
30%.
Mozzie Designs Limited,
There
in
will
which
be
we
20
have
to
a
30%
proprietary of manufacturing of
additional capacity,
hydrogen
but each
purification
and
unit which
every
can
month there
purify
is not a
hydrogen to an
symmetrical
extent of
demand. Like 6 to 9 months, India need
99.999%,
say like it's not
which is
if
a
we need a
very
50
decent amount of
48 gigawatt
purification.
requirement every year.
So as
It's
far
not
as
like 4
the
gigawatt
opportunity
requirement
of
coming
business
every
in this
year, every
segment is
month. Some
concerned,
month it coming 6 gigawatt,
some
some month it
little
coming 3 gigawatt.
inquiries are
So
there,
the
but
companies who doesn't have
till
a
now we have
diversified
not got
portfolio,
any
of course they
conversion
may
in
have
this
few months
segment.
or few quarters
Since this is altogether
not
a
good
new
performance,
stream
and
and
few
it is an
quarters
upcoming
will be good
sector,
performance. But
people
company like
are
APS
quite
who have
upbeat,
the
and at the
diversified
same
portfolio,
time, people are
they can maintain each and every
basically in
quarter
the
in and
state of
out
dilemma with
at
whom
least
they want to go.
what they need.
So this sector may take little time, but I am sure
Okay, thank you.
with
Like,
the
I
passage
mean,
of
are
time,
the margins
we shall be
sustainable in the
growing
near
at a
future?
very good pace in this
Margin, of
sector.
course, there should be some
Just to add to
pressure on the
Samir's
margin for upcoming years,
explanation,
but
let me
it will
put
be
it,
adjusted by
make some
the
correction as a matter.
top line
I
revenue.
mean,
And
you
as
know,
long
you
as
were
we are
saying that we had
entering
said
in
that
the
we shall
vertical
be putting up
integration,
this
the
plant in
margin will
Anjar.
also
Actually, you know, we had said in our
will be
last
increased
call
also.
that this is an
So for
alternative
next, I
available
believe
to
from
us
now up to
for
5
putting
years,
this hydrogen plant in our
Indian
Malwa
renewable
plant, where
energy
the
margin will be
tariff has
sustainable.
been downgraded
Yeah, thank
drastically as an
you, Dr.
alternative
Ansari.
measure. But at the same time, we also told that, you know, we are going to have a pellet plant over there. That will be our first preference. And this will be our second
Nikunj
preference.
ji,
So
we
we are
can
just moving ahead as
in
per
the
that.
Q&A section
And
there are
we
a
hope
couple
to
of
commission our
questions.
pellet
So one
plant
is from Nayan
very shortly
Gupta.
within
His
next 3
question is,
months'
what are
time.
your views
And, you know,
on
based upon
low
its success and
capacity
again, you know,
concerns
based
in
upon
indigenous solar
the
module?
tariff order
Please
which
discuss
comes from the
that
government,
demand
we
versus
shall
supply
take a
in
further
coming years
call
in
on
Indian solar sector,
hydrogen
and
plant
what would
to
be
be
the
commissioned
effect
in
of
Malwa
government
actually.
policies coming in June 2026?
Understood, sir. Understood. So my
Yes,
second
yes.
question
Okay.
is with regard to the oil
From the
and gas
June
segment.
20, like see,
So now
there
we
is
are seeing that
already ALMM
India is on
requirement
the
now.
path of becoming
So
self-reliant
from
and
the
reducing
June
the imports of oil and
2026,
gas.
um,
So are we
it is
seeing
not going
any
to change so much
further traction
because
from whatever
still there will
existing
be
order book
C&I
that we
segment
had?
and
So is
some
there any
personal project
additional
will
movement
be
that we are seeing
the
from the
solar cell will
industry?
be keep imported because currently
So this is
also the
Pankaj.
rooftop
We have
projects
seen a
are
lot of
under
traction
ALMC,
from oil and gas.
the
If you
pump
are aware
projects
that
are
there is a
under
new refinery which
ALMC,
is coming up in
and
Andhra Pradesh
only the bigger
from
projects
BPCL
which
side.
is from the
Good
say
expansion
like
is
Coal
going on in Bina
India
refinery.
and
Good
the
expansion is
NTPC,
going on
those projects
in
will
Kochi
come
refinery from
under
BPCL. So lot
ALMC
of
from
inquiries are there.
year, if you
2026
are
onwards, which
monitoring a lot
APS
of
is not
EPC
doing it
tenders have
all
been
up to now.
finalized recently,
For
to
us,
Toyo,
there
to
will be not
TACNET,
many
to
changes, but
L&T.
overall market,
So
yes,
we
there is a
are
good
getting,
demand
we
of
have bidded
local solar
to
cell
all
in
of them
upcoming
as a budgetary part,
years.
and now they got
We
the
don't
order.
have any exact
So we
numbers.
have a
How
good chance of
many
winning those orders.
manufacturers are planning?
Understood.
There are
And
many
sir,
people
just one
saying they
thing.
are
So
planning, but how
what is the
many will
general
be
timeline of
executed within
execution
next 12 to 24
an
months?
order of
That will
from
be
the oil and
very
gas?
important.
I mean,
But
obviously it will depend on the
overall,
size and
if
scale,
we have
but
18
and
to
general
volume.
timeline.
90 gigawatt
So
capacity
6
of
to 18
solar
months
cell, we do
are
have a
required because
ability where
initial 5-6
everybody can
months are
make
required to
a
procure the
good
raw material
margin
itself, and
as
then the
what
execution will
business
start
needs.
at the shop floor.
But currently we have only
Understood, sir. Understood.
20 gigawatt
That's it from my side. Thank you, sir.
running
All the best.
Thank
capacity
you.
as per the
Thank you.
recent reports. 2025 running is
Thank you.
15, but
Next
then
question
few are
is from the
coming.
line of
So
Vinod Modi
25
from
gigawatt is
Incred.
what
Please go ahead.
some reports saying.
And sir, my first question basically pertains to your order inflow. Last
We
time
have
you had
Mr.
guided order
Sandeep
inflow for the fiscal
Kaur
around
to ask the
1,500 odd
question
crore,
right now.
right?
Uh,
And if I look at your, closing order for first half and opening order, it appears you have got around 500
Sir, you
crore
are
kind of inflow in first half. And as you are saying, you would be adding 500 crore from power and across 100 crore from oil and gas. So 5 plus similar 1100, 1200 crore kind of, order inflow it looks like. So there would be shortfall around, 3 to 400 crores.
Similar
Right?
to last year, or will these
Am
margins
I
rise? That's the first
am I
question.
am I connecting the dots, sir? Is it?
Sir, I mean, the little
We will
difference is
maintain
in
and
the
we are
power
pushing
sector.
for
Little
the
difference
little
is in
bit
the power
better
sector only.
performance than
So
the
that is the only
last year.
difference. But what we are
Sir,
saying is
can you
that,
be more
these are very,
specific
very
with the
approximate
numbers?
figures which we are trying to
Uh,
give it to you. We are still
uh,
hopeful that when we open the next year,
So
we
I
shall
will
have
pass
an
it
order
to
book
our
of around.
CFO. Maybe
So
he will
around
be
1100 to
right person. But
1250
overall, I am
order book will
expecting
be
a
there on
better
1st of
year than
April
last year.
2026.
Kalpesh, you like to say
Yes.
add something?
So we are
Hi, Sandeep. How are you?
purely
I'm
secured
fine. I'm an
from the
investor in your
execution point.
company, and
At least
I look
nine
forward to
months,
grow with
3
you.
quarters are
Thank you
Yeah,
fully
very much.
secured.
absolutely, absolutely. And we also would like,
Right.
everybody grows with our
So,
company.
and we again,
So
as
I would
as
like
I
to
said, that
answer
we
your this
have a
question about the
good
margins
pipeline available for
going
26,
forward.
27.
So right now, as the Nikunj
Our
bhai said, the
expectation to
pump,
book order
we have
for
got
to the
margin
tune
of
of around
about,
1,800
13 to
crores for this.
15%. Wholesale has got about 10 to 11%.
1,800 crores for
Retail has got about
FY27.
15 to 18%.
Yeah.
And this
So
margin has
if you see
sustained in the last 3
26,
quarters.
27
And going
and
forward also
like
in the
1st
next
April
3 to 4
27,
quarters,
if you
we
see
expect the same amount of margin.
1.5
Probably
years
wholesale can
after
go
that,
down a
we shall
little
be
bit
having the order book
because
of
of the
around 1,600
competition.
crores.
Probably
That's
let's
what
say
we
from
are
right now it is
targeting.
10.50, 10.75 right now. So
Okay.
it can
And
go
this year
down to
would be
10%
200
max,
crores, so I
but not more
got
than
it, sir.
that.
And my
Pump,
second
we
question
continue to
basically
maintain
pertains
the
to your
margin because the
execution, sir.
order
Of
book
course,
that
I
we
mean, you
have got
executed
the
quite
margin,
well
in
first
the
half,
next 6 months
but
that we are
still,
going to get.
given the fact our
And for
order
the
inflow has been a
retail
little bit
will
slower,
definitely
and
have good
despite
margin
that, we are
because
maintaining 40 to
retail and CNI have
45%
got good
kind of
margin of
growth for
about
the
15 to
fiscal.
18%,
So,
which
sir, to
we
achieve
continue to
this, I think
sustain for
second
the
half,
next 3
I
to 4
think
quarters.
we need to, report a growth of, 50,
Can I continue with
52%
my
kind of
second
growth,
question?
right? So that
Yes, please.
basically calls at a rate of 350 plus
Considering
sort
that
of,
there's a lot
revenue.
of new
So are
capacity
we on
coming
track
up, whether it's
to achieve
Wadi,
that kind of growth? Because
nearly
I
every
feel,
player is
40 to
expanding.
40% kind of
So,
there might be some sort of,
what
downside
is
risk.
your company's
Listen, as I
future
just told,
strategy?
Q1,
Would you be dependent more
starting
on
from
tenders,
Q1 to
or would
Q4,
your
there is
strategy be
a,
more
linear
focused
graph,
towards
upward
actual
linear
users
graph
and your pump
is there in
business?
that. We are quite hopeful. We
Good
are quite
question,
hopeful,
Sandeep.
and we have
Nikunj here.
the numbers supporting us.
See,
We have the
India,
order book
as
supporting
I
us, and we have the
said, as
material
a
supporting
India,
us.
we have 40 to
Again, I
50
will
gigawatt
like to say
every
that,
year
whatever
requirements.
numbers we have
So
given, there may be
30% requirement
slight
comes from the
downturn because
residential,
of the
C&I
pullback
and pump segment.
which will happen
Another
in terms of
70%
power
means
sector
35
orders.
gigawatt
But
comes from the
we are not
ground
expecting
mounting
any other
projects. But as
major
a APS,
deviation
from
from that.
this
There
quarter,
may be
we have
little deviation. I
started
do not say that 100%, but
recruiting the
very little
salespeople who
deviation may
can
be there.
go and
But whatever
speak to the
deviation will
project
come, it will
development.
come
Because
primarily
until
from the
now, our capacity was
downtrend
always
of the power
occupied
tariff, which we
for
have
the
declared
remaining
right in the first quarter.
35% of the market share, like residential, C&I,
Okay.
and
Thank you. Thank you,
pump
Nanda.
project.
Yes.
And it is always easy to get 50 megawatt order
Thank
and
you.
do your
The
turnover.
next question
But
is
it is
from the line of
always
Kamlesh
hard to
Parmar
do
from Lotus
50
Asset
kilowatt,
Management.
100 kilowatt
Please go ahead.
projects,
Yeah, thanks for
and
the
we have done
opportunity.
that very nicely, and I must say, I must congratulate our team for that. And that ability, again, we are working in very limited states. Example for residential, we are just doing in Gujarat, Rajasthan, and Maharashtra. But that we can expand to so many states in coming periods very easily, because we have a good exposure working in this. Earlier we were just working in Gujarat.
Sir, I
We have
mean,
added
you
the
can put it like that,
Rajasthan,
but
and then we have
ultimately
added
what
the
we have to
Maharashtra.
think is
So
that
that
what
we
is our
can, that
capacity and how
division
we are
itself
going to
can grow
move ahead
for
further
next
on that.
3 to 5
We are
years
telling
easily.
that in
Which
power sector jobs,
for other
we were
manufacturer,
definitely expecting much more
if
orders
they
in
want
this
to come
particular
in this
year.
segment,
Then
it
the
takes
flow
easily 2 to 3 years or
has
4
actually
years.
happened.
But for
But
APS
now, since
to
in the
grow,
first
to
question
go
I
in
told
the
that
ground mounting project
that
supply,
the
it
traction
may
has
take
started coming now
good
in
salespeople,
full
and then
speed.
that's it. Because
Earlier
we are
the
in
speed was very minimal.
we are in
People were
manufacturing since last 12
concentrating
years.
more on their
We
engineering,
people
more
know
on
us
ordering the long
as
lead
a brand.
items and
We have so
sorting
many
out
solar
the
panel installed in country
the
since last 12
differences which
years,
have
and they
come
are
because
up
of
and running
time.
as well.
Earlier they were
Just only
practically
difference will be
disorganized.
they were
They
100
took time
kilowatt
in organizing themselves. But
job,
now
and this is
the
going to be
things have been
1
streamlined
megawatt.
with everybody,
So
with
we
BHEL
as
also and
we
with
have
L&T also.
66%
We had
market
this
share
very large
is open
discussion
for
with one of
us
the
to
customers
expand.
last week. So, where
And
we are talking of a
for
sort of
us,
a,
1 point, to
collaboration
keep the
sort of a
1.2
thing that,
gigawatt
ultimately we have to share the
capacity
capacities.
busy,
People do not
I
have the
don't feel
capacities.
that challenging at
In one of
all.
the earlier
Even
questions again, I
coming
told that, we are making a paper on that,
because we are
what
one
is
of
the
the pioneer
likely
solar panel
load and
manufacturer in
how it will
India.
be distributed, and we
And
shall
we don't have
share it
we
with
don't
all
want
of you
for now,
as
like
soon as
within 3
possible
months or
through
6
stock
months, we don't
exchanges,
want like 5 gigawatt
which
or
will
10
really
gigawatt.
tell you very transparently
That's a
where
very
we are
good
and how
strategy.
we
So
are trying to
basically, you're
move
saying
ahead.
your focus is going to be your own end consumption in residential and pumps. Is my understanding correct?
And we will grow in ground mounting supply now. So if we see overall portfolio, because until now we had 400 megawatt capacity. So 400 megawatt will easily consumed by residential supply and the pump. So even we are adding 400. So even we do up to 600 megawatt for our in-house projects for solar pump distribution and the
Sir,
residential.
we are not
Still,
saying that
we
we are
only
not
may
hopeful.
require
We are
400 to
saying that
600 megawatt
it's
capacity,
a
and which
government
we still have
machinery.
6
It's a
months
government
to grow
machinery.
that
And
division,
in
and
government
that
machinery,
holds
there is a lot
66%
of
of India
leg
market.
pulling by one department and on the other
Can I
department. So,
continue with my
that's why
questions,
we
or
are
should
saying
I
that
hand over
it
to
may
somebody
take
else?
some
No,
time. But again, I
you
will say
can.
that even if
So can you give me a breakdown
there
on
is
what kind of
no resolution,
percentage
even if
is
let us say in a
pump? How
worst
much is
scenario they do not revise our tariff of
ground
Malwa,
installation? How much is
we
residential?
told you
What
last
kind
time
of
also that we have already
breakdown do we
started
have?
putting
So,
up another
in terms
plant
of
with
the
very
turnover
minimal
or in terms
investment,
of
which is
the
called
profit
biomass
percentage?
pellets plant, and for
Both.
which the raw material will
Okay.
be same.
In terms of
We
the
shall be using
turnover
the
until
power
this first
produced by
6 months,
the same fuel, and we shall be
I
selling
pass it to
those
Kalpesh
biomass
because he has the
pellets
exact
in the
figure, so he can
market,
get the
which shall
correct
give us
information.
substantially
Yes,
high
Sandeep, this is
revenue,
Kalpesh
which
sir
we were
again.
getting earlier in this
So in
through
pump,
by sale
we
of
had
power,
got a turnover
and
of
almost at the
102 crore
same
point
margins
89
also.
lakhs
Margins may be little
in
bit
April to September
less, but
quarter. In
practically
wholesale,
we
that is
shall be
our
achieving
distribution
those
side,
numbers. So,
we have got a
that's why we
turnover
are
of
saying
about
that
165
if it
CR.
happens,
And
it's
retail,
well.
our
If it doesn't
EPC business,
happen,
retail
we
rooftop,
have the
residential
plan
rooftop,
B
and
in place.
CNI
Then,
has a turnover of about
again I'm
24
saying
crores.
if
With a
absolutely
margin,
government says that
as I
no,
said
we are
earlier,
not interested
that
in your
pump
power,
had given
we
a
will
margin
go
of
for
about
our hydrogen
15%,
plant in the
which
same
is a
location.
profit of about 15 and a
Some
half
more
CR.
capex, but it is
And
equally
wholesale
lucrative business in that.
distribution
Then how?
department has got a margin of 10.25%, which has got a profit of 16.99 CR, about 17 CR, And retail has got a margin of 17%, which is about 5.75 CR.
If I see your segmental margin for the piping, it is
Nikunj,
14.1
Nikunj, I am sure I'm addressing your marketing
last
team.
year. And even
What
if
is
I
your
see
strategy? Would you have
quarter-over-quarter,
your own teams
despite
in place
such a
for
sharp move in
marketing, or will
your
you
order
do it through
execution, the margins
dealers
have
and
improved quarter-over-quarter
self-appointed
hardly by
dealers
around
or
40 basis
wholesalers, or
points. And
what is
for
your strategy,
year-over-year, the
marketing
margins
strategy
are
going forward?
literally down.
See,
So
when say
what is the
like
thing there? Is
state
it
like
primarily
Gujarat,
because of
even we
bad
support all our
execution, or
distributor
what is the
in
issue
other
there?
state as well. But state like Gujarat,
sir,
our
overall,
marketing,
if you see
we have
the
in-house
EBITDA
marketing
margin
team.
percentage
But
last
say
time
like if we are
was
starting in a new state, say like
I am
in
referring to EBIT
MP,
margin, sir.
then we support our distributor. We
So
have in-house
EBIT margin
marketing
is
team.
very,
He
very
support
clear.
our
If you
distributor
see
business to do the
Q2
marketing for his
fiscal
business and our
25, there
business
was
together.
an other income.
So
What kind
the
of
Other income
okay,
was
go on.
to the
Yeah.
tune of 16 crores, whereas in
so
this
the channels where we, so the states where we have strongly
26,
established,
the other
where
income is
we
only
basically
6-7
spend in
crores.
marketing
So
based on the
that is the
revenue per state.
major difference. So I
So
have
the state,
already, in
if
my
you are doing that
opening
much
remark,
revenue,
I have
we do
already
certain
told you
percentage
that
of the marketing.
this
And
amount
if
of
the
10 crores is
Nikunj, since
causing
I'm a
that, and
businessman,
that is
sir,
why you
when you
are
do this kind of a
witnessing to
marketing,
that number.
how many people, what kind of people do you have in maintenance? How many people in
Quarter on quarter also,
marketing,
I am
and how many
saying
people
in Q2
say for
fiscal 25, the
overall
other
looking
income
at the
was
structure?
16
So are you going to have
crores.
a very thin structure, or are you going to have a hierarchical structure for this marketing?
see, when the marketing
You are
for
saying
a
quarter on
residential
quarter?
rooftop,
Yeah.
whichever state we
So
active,
quarter on
all the
quarter
call comes
also,
to our call
our
center,
EBITDA
and we train
margin
our
is
staff to close the
16.3
sales
operational EBITDA, I
on
am saying,
phone. We do have the
than that
service
of
team
16%.
in because anyway for distribution
So
as well we
that is,
need a
there is
service
an
team.
increase
So
of
we use
30 basis points.
we like say every 50 kilometer or 75 kilometer if the or 100
So
kilometer. So when
EBIT
we have
margin
a
is
strong
12%.
penetration
Now
within 50
EBIT margin
kilometer
is
radius, we will have the
13.1%.
one service person. So in Gujarat we have like 14 to 15 service people. But if customer wants them to visit, so same people go and visit and collect the documents from the customer as well. So they do both. They support the sales and they do support the actual service as well. To all the division, like pump division, wholesale division, and the retail division. So basically for sales, we need one good call center and we can expand the sales for residential. For the installation, all the installation happen by the contractors.
In our power
So we have identified contractors, we give them a training, we also check
the
their
revenue we
installation
booked at
randomly. Initially 5
8.50.
installation, we
And
must
in
check, we approve them.
Q2,
After that, every
3 months,
randomly
we
1
booked
out of 10
revenue at
installation get checked
3.5
by
rupees
our
per
team as
unit.
well.
So that is the major difference.
So
the difference
I
from
have
power
3
generation
suggestions.
business is actually
This strategy is
contributing
okay, but
this
you need to be
low
more
margin
proactive. For
upside.
example, when I look
So there was
on
1
the
month
social media, I find your
margin
presence is hardly
was
there.
coming from the power
And I see
generation
that
business, whereas the downward trend
on the
was
social media, YouTube,
witnessing for 2
Instagram.
months only. In
This is
Q1.
what people look
Whereas
at. So
in
Q2, in the
Q2,
social media front,
downward
your
trend is
presence
for
is
the entire
hardly,
period.
I would say, insignificant. Your competition is there. Adani is there. Wari is there. Your others are there, but I don't see you there. So may I suggest that you have a team just for social marketing, the social media marketing.
Thank you very much. It's a very good suggestion. But even last report I got from marketing team, we got the LinkedIn. We are already there. Even Facebook, we have more than 3,000-4,000 followers. But maybe in some states, yes, we are strong. In some states, because of our capacity was 400 megawatt, and we were limited by capacity as well.
18 to
So
20%.
we follow
18 to
strongly
20%.
7S structure in our business. See, when our sales increase, our service needs to increase, our system needs to increase,
we are
but
preparing
our
it.
staff need
I have
to
already
increase.
requested
But
Pankaj
until
to
now,
prepare
our
that,
capacity
and
was
once
400
it's finalized, we
megawatts.
will
So
share
if
it.
we cannot, if we get a big orders from even in Gujarat, say like somebody comes and give 15 megawatt order last quarter, we couldn't execute those orders.
Thank you.
Because 400 megawatt, we have already our regular order. Maybe now
Please go ahead.
we can start 5 megawatt, 10 megawatt, not even more than 15
Yes,
megawatt
please.
order
Yes,
in a
please.
month. still we may do up to 5, 10 or 15 million because we have already existing business and channels available. And marketing we do step by step, but it is very good suggestion. Maybe to expand in Facebook, it is not very costly, and also in Instagram and LinkedIn. So I will put some additional pressure on our team, and we will make that achieve.
So partly,
as
this is
yes,
for me.
YouTube is a very good channel.
I have already
today's youth is looking at
this
YouTube,
question in the
and
one
I
of the
suggest also working with influencers. The
so
fact
just to let
I
you
know your
that
presence.
we
I mean, you have a very limited
entered into
manufacture and your
joint
this thing,
venture
and
with
your
the international
you don't have much to
partner,
sell. But the point is
for
that social marketing
setting
is
up of
actually
a
seeding.
complete
The
hydrogen
results
plant.
you'll get in 2 years, 3 years. You
in
must have a
complete
very strong
hydrogen part,
presence,
there are two
regardless.
parts. One is electrolyzer,
You must have a
second is
spend on
separator, and
social
third
media,
is
and
the
take it up
hydrogen
with take it from
purification
me.
system.
It really
To
pays.
Malvi Designs
Yes.
Limited, we
We
have a
already
facility
experienced
for
well in say
producing
like
the
Gujarat,
hydrogen
because Gujarat
purification
we have
system.
very good so many
So
installers
at present scenario,
in our
since clarity
database,
is
so we
not
can
there,
install
there are so
1.5 2
many
megawatt
instant
every
bursts.
month. And we had an
People are in
influencer since
dilemma.
last 8 to
So
12
there
months
are certain set of
in Gujarat,
inquiries
also some
which
YouTube
are
advertisement and Facebook
at a
advertisement. And
elementary
we,
level.
as you said, we are
We
getting so many
don't see
inquiries.
them convert
More inquiries
upcoming days.
as
But
per
we
our
are
target.
quite
So
hopeful
similar
6
things we
months
can
down the
easily
line we will
now start in
have
Maharashtra
some
and
good amount
Gujarat
of
and
traction under
Rajasthan.
this
But
domain.
for that we need internal
So this is
strength
how we are
within a
set up for this domain.
say like production capacity.
Anything else?
We were
If
limited
you
by
want to
production capacity by
clarify.
now. But now
No,
with
sir,
the
that's about it. That was
YouTube
the
and
only
Facebook, the good thing is
Thank you
it's
so much.
by postcode wise or by state wise. So until now we were strong in
Thank
Gujarat.
you.
I'm not sure which
Ladies and
state
gentlemen,
you are
that
in,
was the last question
but
for
if
today. We have
if
reached the
maybe you
end
are
of the
in
question and
Bombay,
answer session.
then
I
maybe
would now
within 3
like to
to
hand the
6 months,
conference over to
you
management
will
for
start
closing
looking
remarks.
some presence in that state as
So
well.
like to
And
thank
if you are
you,
in
thank
Rajasthan, maybe you
everybody,
already
every
start
stakeholder, every investor that
looking
who have been
AP as well.
continuously
But
supporting us,
currently,
believing in our story and
this
on
3 will
our
be our
results.
strategic
Thank you once
and
again.
MP we are
And
adding on.
we
So this 4
reassure
will
you
be our
that we shall
strategic
continue to
states
do our best
for
to give
next 3
value to
to
our
next
stakeholders,
3
our
to 6
shareholders.
months.
Thank you so
Then
much.
we will add some more states and more states.
Thank you. Thanks a lot.
Very good,
Thank
Sadhu.
you.
Can I continue with my question, or do you like me to
Thank
go
you,
back to
On
the
sir,
behalf
queue?
of
Deep,
Equus
sir.
Security Private
We'll now
Limited,
move
that
forward to the
concludes this
Q&A
conference.
section.
Thank you for
But it is
joining
nice
us, and you
speaking
may now
with you,
disconnect
Sandeep,
your lines.
Mr. Kapoor. We will be in touch. And can you please pass our email address, so if he has a more question, we can always discuss, because it's always good to discuss with like-minded people.
I will put my question at the end of the queue. I have so many questions.
Okay, thank you. Thank you. Thank you.
Nikunji, next question is from Nimit Mehta in the Q&A box. So his is, can you please explain the working of Kusum scheme? How is the tendering going on? What are current and expected tenders, and in which states? Second is your market share in solar pumps. Given that a lot of new players are getting aggressive, what do they think? What will be happening to the pricing?
Okay. In solar pump, it's by tender and it's by qualification criteria. So until now, solar pump tenders, hardly 15, 20 or maximum 30 players can be qualified for a solar pump tenders. And usually they need like 1,000, 2,000, 5,000, 10,000 solar pump experience. So maybe the new players, it's not very easy entry for solar pump segment. I'm not sure which particular segment Nimit is trying to say, but the current government solar pump segment is restricted by experience, and it's by tender. So once the tender, and most of the all of the tenders are already allocated, and it comes with fixed profitability. In the other question for the Kusum scheme, there are a Kusum A, Kusum B, and Kusum C. So one of the Kusum C is like pump, then Kusum A is like a PPA agreement, and a Kusum. So there are various Kusum Yojana within PM Kusum scheme. So we need to know which particular PM Kusum scheme he wants to know more. If for ground mounting PM Kusum scheme, APS is currently not very much active. For residential rooftop, yes, we are. And for a solar pump, yes, we are. So 10 states currently, we got the local agency already approved us for the work, and many of the states we already got work allocation done, and some states we are expecting within coming periods.
So next question from the Q&A is from Tejas Khandelwal. So his is, what is your take on the realization of solar modules going forward? So this is because some competitors experienced 4 to 5% drop in the realization on a quarter-on-quarter basis. Second is, what is the capacity utilization we'll be looking for financial year 2027?
Financial year 2027. See, capacity utilization again depend, say like APS have a 13-year experience, and we are expecting to run 1.2 gigawatt capacity at the end of 13-14 years, by again after 6 months. So for us, we don't feel the challenging, but if the solar panel manufacturer who are limited by segment, like who are just doing ground mounting, or who are just doing say like a distribution only, then definitely they have to recheck before expanding their capacity. In terms of the realization in a profit, as long as we are able, say, to utilize 60-70% of our capacity, we are expecting similar profit from profit margin from the business, because we are a diversified solar panel manufacturer who have the solar panel supply also, solar pump in our portfolio, and retail and C&I projects in our portfolio as well.
Now, one last question. This is from +91 Asset Management. So you are moving from modules into solar cell manufacturing. What strategic edge will you have in this backward integration given government TLI support and intense Chinese competition?
See, China is in solar cell manufacturing since last 15-20 years. We are protected by the government policy. So, and government policy is already there from 2026. We need DCR cell, and maybe after 6 months or 12 months, it's too early to say, but maybe they will further strengthen the requirement for imported solar cell within in a country as well. So we don't need to see how we can compete China, because it's like somebody is studying in PhD and somebody is in year 10, and we are trying to compete between those two students. It's a little bit bitter to hear, but this is the truth. When we see the Chinese company and the growth of the Chinese company and government support and the industry support, and it's at a different level. But good thing is, we have our own policy, we have our own demand, we have our own market, and we as a APS, if by entering in solar cell, currently we are seeing the margin, so much margin we are losing we are paying to solar cell manufacturers. But the good thing is, we have a long-term good supply, so we can at least getting a continuous supply. But if there will be enough capacity in coming period, there are two types of solar cell manufacturer also coming. Some who already have a solar panel facility, some who doesn't have a solar panel manufacturing, and they are just coming with a fresh background in solar cell manufacturing. Some are already contacting us for the long-term contract with them because they don't have a solar panel, but they are coming with solar cell. So in that case, the companies who will have right amount of capacity in both for solar cell and solar panel, they will have a sustainable margin long term. Example, if APS needs 2 gigawatt solar panel and APS will have a 3 gigawatt solar cell, that called right. And if we consume 70-80% of a solar panel within our business and 70-80% of solar cell for our business and little bit supply to other company, then those company will be always sustainable. But if somebody have 15 gigawatt capacity and if their utilization will go say like a 5 gigawatt or 6 gigawatt, they will start losing money. I hope it clears the answer of the question. But if there is a further questions anyone have, please pass our email address and we will address each and every question.
Thank you, sir. That was the last question. Now I would like Nikunji and Kalpeshji to move forward with the closing remarks.
Once again, I can see more than 56 party for earning calls. I'm very, very happy to see all of them, and thank you very much for time you have spent and all the questions you have asked to us. Sorry, due to time limit, we couldn't answer each and every question, but you can take our email address from Confidently Partners and please send us an email and we will answer each and every question within a timeline. Thank you very much. Thank you.